Well, hello everyone. Thanks for visiting my channel. Uh, my mission here on this channel is to extract money from the market with the least amount of risk. And who's stopping me from doing that? Well, sure, I can be my worst enemy, but I always remember who I'm up against, the pros. The number one rule of investing, don't lose money. Rule number two of investing, see rule number one, said Warren Buffett. One thing I want you to think about, uh, more so on a micro level, is what's commonly referred to as number of occurrences. What are these occurrences? The way I look at it is any time that I receive a dividend payment or any time that I sell a stock for a profit. Uh, Commonly, we have monthly dividend payers. You can get 12 plus occurrences per year. Quarterly pairs, you get 4 plus occurrences per year. Sometimes they throw in a little extra there. Usually at the end of the year, you can look back on this year, 2020, there was quite a few extra payouts or increases in the dividend amounts, especially on those monthly dividend payers. But you can reduce your risk and increase your occurrences by simply following some rules. CEFs, for example, in many cases, pay the highest number of occurrences, 12 plus times per year. The trade-off is that they are less volatile, so they're traded less frequently. Now, stocks and ETFs, on the other hand, have lower occurrences, 1 to 4 times per year. You can have annual, semi-annual, and quarterly, but tend to be more volatile, so are traded more frequently. Of course, there's exceptions to these rules. If we look at, you can use some of the resources out there for CEFs, that first one there, www.cefa.com. FinViz, pretty common. They have a lot of charting capabilities, and one less commonly used. I normally don't trade ETFs, not unless they pay a substantial dividend. I'm kind of weary of them, but everybody has their own risk tolerance. So pay attention to what I'm doing, and maybe you like what I'm doing, maybe you don't, but give it a shot. I'm only interested in dividend-paying companies. I'm not into growth stocks. We have a lot of overpricing in the market. We have a lot of hype. With dividend-paying stocks, all you have to do is read about their budgets, capital improvements, financial reports, etc. But in the end, the bottom line is, are they making enough money to support paying me and everyone else a dividend? If the answer is yes, then that's enough for me, as long as the dividend is stable or improving. The next important question is, what is the least you're willing to take per year in dividends? And this is where most people concentrate on the yield. For example, if you have a dividend amount of $1 and a stock price of $10, the yield is 10%. But let's say you have a $4 dividend amount and a $100 stock. Why, then the yield is much lower at 4%, but your amount is larger. I really don't care whether or not the stock pays, as long as it meets my minimum threshold and fits my risk parameters. I want, at a minimum, $1.20 per share per year. And this brings us back to the number of occurrences. The size of your portfolio will dictate how much of any one stock and the number of shares you can own, max shares. Note, max shares are not static. They can and do change based on market conditions. Here's a chart of how I manage portfolios. Anything below $100,000, we use 10% of the max shares for any one underlying stock, CEF, ETF. And you can go down through 100 to 200,000. You're using 20% of those max shares. And this is per trade. So it's all based on, that max share amount. As you go up through I'm sure a lot of you won't be in the $900 to $1 million range, but we like to start small because you need to understand this is a totally different system than what you're used to. I don't know of anybody else that's using this approach. So in example one, I don't know if you guys are familiar, 3M, that's 3M, the company. It's priced at $175.66 at the time of this recording. The dividend amount is $6.40 per share per year. Max shares work out to be 10 shares. Below in a portfolio, 100,000 K and below, I can risk 1 share. The profit target amount is $6.40. In example 2, SNB, have no idea who they are or what they do, don't care. Do they pay a dividend? Yes. It's priced at $37.20. The dividend amount is $1.32 per share per year. Max shares work out to be 30 shares. Now, if you had a portfolio of 100 to 200,000 in a portfolio, I can risk 20%, which is 6 shares. My profit target amount is $7.92. You're simply multiplying the 6 shares by how many shares. Staying mechanical and staying within the rules allows me to become more diversified and reduces exposure to adverse market conditions. By multiplying these numbers by multiple trades per year, and you start to get the picture. If you're lucky enough to have a broker and does not charge fees for stock trades, you're golden. Of course, we're not going to get into the dollar cost averaging. All I'll say in this part is you do not dollar cost average above what you actually paid or your break even. That's just a simple rule, but we'll get into that later. Dividends and number of occurrences are a very powerful tool that gets you to your financial goals. If you're new to investing and trading, there is a learning curve, and everyone has their own speed. And for those with years of experience, maybe it can help augment your profits. I will answer questions to the best of my ability, but I will not give financial advice. Watch carefully what I do. It's the best way you can learn. No lottery tickets, just consistent profits. Also be realistic with what you want to make off your portfolio. Doubling your account size in 1 year is a pipe dream. Think long term. 20% profits equals 3 years to double your money, approximately. The beauty of this system is that you're not tied to your computer screen. Once a week, you get your basket of dividend-paying stocks and open up the cash flow pipeline. With the technology that we have today, you can always have it on your phone. You know when you keep a piece of paper or have something on your phone that you know what your target prices are, and you're simply working with a small amount of stocks. So in closing, you'll see me use charts for referencing and setting up dollar cost averaging. No one, and I mean no one, knows where the markets are going. Here's a quote from Paul Samuelson. If you think investing is gambling, you're doing it wrong. The work involved requires planning and patience. However, the gains you see over time are indeed exciting. So good luck with your endeavors. I'd like to see you in the room, and thank you very much for your time.